The monetary system is broken. What do I mean by that? I mean that the governments have got themselves into a trap where in order to support the system, they have to continually print more money, which then leads to inflation, which then leads to monetary debasement. I show the wealth gap and how in America today, the top 1% of Americans own 92% of the assets, and the bottom 50% of Americans own, 15% of the assets, and it's flatlined. And that 92% has been going up, year after year. So it's a very fair, broken monetary system, very unfair, broken monetary system. And sound money is the fix. What gold knows is that the monetary system is broken and that governments will sooner or later be forced into printing money. And it's just front-running that move.
The United States is rapidly approaching a monetary breaking point. Data from the Federal Reserve Bank of St. Louis shows that the U.S. M2 money supply has surged from $663 billion in 1971 to over $21 trillion by late 2024. This equates to a compound annual growth rate of nearly 6.8%, a relentless monetary expansion that veteran investor and sound money advocate Lawrence Lepard identifies as the actual driver of inflation rather than corporate greed or external shocks. Lepard warns that the nation is on the verge of a monetary collapse, with gold being one of the few viable solutions. He argues that America is now in the final phase of a decades-long monetary experiment that began with the creation of the Federal Reserve in 1913 and accelerated when the U.S. abandoned the gold standard in 1971. The 21st century has been defined by economic turbulence and socio-political instability, driving gold to record highs as investors seek its perceived safety. Each surge in gold prices fuels speculation about even higher levels. A recent survey by U.S. Bank found that 58% of fund managers believe gold performs best during a trade war, compared to just 9% for 30-year Treasury bonds and 3% for Bitcoin. Meanwhile, as the U.S. deficit spirals out of control, gold is increasingly viewed as the world's ultimate safe haven asset. Regarding the inflationary impact of widespread tariffs on American consumers, former President Donald Trump has reiterated that the U.S. may need to endure short-term economic pain to usher in a new golden age of prosperity. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
The monetary system is broken. What do I mean by that? I mean that the governments have got themselves into a trap where in order to support the system, they have to continually print more money, which then leads to inflation, which then leads to monetary debasement. And this inflation has really hurt the social fabric all around, and that's why everyone's so angry and the politics are so divisive. But as I say, they're arguing about stuff that doesn't matter. If you really want to drain the swamp, we've got to return to sound money. With respect to the wealth inequality, that really occurs because the table and the playing board is tilted in the favor of those who know how to make money off inflation. Rich people who have assets and who have the ability to access cheap debt, particularly when it was at 0% or very low interest rates, they can borrow money and use it to buy assets that provide a yield, and they become richer as a result of taking that step. The average common man who's working for a salary and isn't a financial operator doesn't necessarily know how to do that, or even can't do that because their credit card borrowing rate is 25%. So the system is really set up in a way that allows the rich to get richer and keeps the poor kind of permanently poor. It's just very unfair and very sad. And that's one of my favorite, most depressing charts in the book, is that right in the beginning, I show the wealth gap and how in America today, the top 1% of Americans own 92% of the assets, and the bottom 50% of Americans own, 15% of the assets, and it's flatlined. And that 92% has been going up, year after year. So it's a very fair, broken monetary system, very unfair, broken monetary system. And sound money is the fix. Money is the thing that we all agree to store value in and to transact in. And there's three forms of money. Gold is geologically based money. Fiat is money controlled by the governments and the central banks. They control the supply of it. And then Bitcoin is algorithmically, mathematically controlled money. And so the fiat money that the governments print, they can print as much as they want, and their solution to all problems is to print more money. And basically we're kind of continually having our beer diluted by water, and so it's just not as strong because the money gets watered down every year. Right. And it's unfair to the working person because, that printing generally benefits somebody who's a debtor, it makes their debt easier to pay off. But the working person doesn't have much debt capacity. And so the higher prices, without their wages necessarily going up, they pay higher prices. So they're just continually getting squeezed. And the people who are at the top of the system, they know how to play that system in their favor. And that's why we have so many, extremely rich people in the private equity in the LBO world and the financial world, the hedge fund world, et cetera. All these people have gamed the system in their favor and worked to make the system more unfair. And the book goes through a large history of that, as you'll recall, just the way they changed the rules on derivatives. And there's just so many, there's example after example of it. And, I felt like it was important for somebody to tell that story so that, a common person who sits around and says, gosh, why is my life so hard? Why are my groceries so expensive? And maybe hears from a politician, it's greedy corporations. They actually are armed with some facts and can fight back and say, no, that's not really the problem. It's the government and the Federal Reserve that are printing all this money. That's really the problem. We got to stop that. We got to go back to sound money. Close to that. I mean, I think it'll be bigger. It's really mathematically driven, and the development really kind of, if you go way back, and the book talks about this. It started with the Fed, then it got worse in '71, but it was a slow boil until 2008, and that's really when the true monetary chaos started to break out, and they put interest rates at zero and printed a ton of money. And of course, so that was the first big print, and there was another big print in 2020 in the COVID example, and that they created 40% of the money supply in 2 years. And that's what's causing all the inflation and pain that people are feeling right now, which is very sad. And the reason I say it's coming to a head, Jeremy, is just that if you look at the debt to GDP, you look at the U.S. federal government budget deficit, you look at the debt they have to roll over this year, and they focused all on short-term debt because people aren't buying the 10-year, and they don't want to buy the 10-year because everyone recognizes the inflation risk. If you look at the math behind those things, what you see is that it's just unsustainable. And in spite of the good efforts of Doge, the government efficiency effort by Elon and Trump to cut expenses, it's going to be extremely hard to do because 80% of the expenses are in areas that are kind of considered untouchable. Basically, Social Security, Medicare, Medicaid, defense, and interest. And so, and if you cut the balance of the 20%, even if you took that to zero, the budget still wouldn't balance. So you've really kind of got a situation where the government just has to keep printing money and at an accelerated rate. I mean, one of the quotes in the book is that the problem with inflation is that it's like getting a drug high or a liquor high, and to get the next one, you got to take more. So it's cumulative, and it appears to be coming to a head. And a couple of signals that it's coming to a head that you and I can both see, and it's very obvious to most people. Gold is just relentlessly pushing to record highs every day, week, and month. Here we are at 3,100. Last March, we were at 2,070. So that's a 50% move in a year, which is a really large move for gold. It has very rarely done that. And then, of course, Bitcoin also hit a record high of 106 and 7. It's backed off to 85. But the point is that these are canaries in a coal mine saying, hey, monetary debasement's a problem. We'd prefer to hold gold versus bonds. What gold knows is that the monetary system is broken and that governments will sooner or later be forced into printing money. And it's just, maybe I should own some gold. And the gold market, by comparison, is tiny. The total market cap is about 20 trillion, but really only about 10 of that's available because the other 10 is either in a central bank or on a lady's neck or in a museum. So it's actually less than 10. It's more like 6 or 7 is available for purchase. So 950 trillion in assets, a sound money market for gold of 6 or 7 trillion. Well, if only 5% of the 900 says, gosh, I want to protect myself, that's 45 trillion dollars. And, that's chasing a $7 trillion market. So what's that going to do? That's going to push that gold price up.
Gold has long been valued as a store of wealth, with its price often seeing the most significant gains during economic uncertainty as investors seek safety in this reliable asset. Predicting where gold prices will go next is never straightforward. The World Gold Council notes, this is particularly true in developing economies where gold is often used as a luxury item and a means to preserve wealth. Market volatility remains a key driver of gold's value as investors turn to it as the ultimate haven and a hedge against currency depreciation, inflation, and broader systemic risks. Looking ahead, gold prices will be influenced not only by Federal Reserve policy, inflation, and geopolitical developments, but also by fundamental supply and demand dynamics. If a significant financial crisis unfolds, where do you see the best opportunities? Gold, silver, Bitcoin, or another asset, join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.